Happy Friday, Pat. Here's the
Hey,
hope.
Rick.
Here's the hope, and the internet stays up.
I'm so embarrassed. I've been embarrassed the whole last week that it just goes to show you that you are the captain of the ship, because the ship was going down last week to Edmund Fitzgerald, and I ran like a little weenie away from the ship. I didn't know what to do. What happened? I thought.
Well, I don't know if there's
captain. I was a co-captain. You had a co-captain that basically just jumped ship. I was like, oh my God. So hopefully let's keep our fingers crossed.
Well, I don't know if there's really any buttons you can push on your end, because I set this thing up, so I'm like the host and you're the guest on StreamYard. And so when it went belly up, I just dropped off and you were still going. And
hopefully my camera was off and I was seeing some swear words.
Yeah, probably not. The interesting thing was that when I went back into YouTube just a few minutes later, and we were still live, even though we weren't talking or anything. It just showed this, our little blue outline here, and it said live. So people are probably like, wondering, what am I watching here? So
let's keep the ship moving here.
Yeah. So I've got a nice new internet connection now, and I like it. And the technician said there was a problem with something out on the street, and he made a note of it. So I think they came the other night and fixed it. So we'll see what happens. So Friday numbers today, 4,800 listings are on board. On the 7-day moving average, we have 4,097 contracts and 4,320 or 4,097 new listings and 4,320 contracts. So they beat it once again by 300 units. So, the more things stay the same. The Cromford Index makes a note and says the overall situation is that demand is moderating slightly while supply has seen a minor increase. The number of new listings has risen over the past 10 days and is now slightly above what we would consider normal. Down here it says the current slight cooling of the market is barely perceptible on the ground. No kidding. And it's a healthy phenomenon. What we don't want is a sudden sharp retreat from the all-time high. So we don't want us to just, change all of a sudden. So it's changing ever so slowly, and it's probably going to take a few years to shake out. Wanted to share with the group. I always talk about listing photos, right? So I pulled up some listings yesterday, and this one came on, and it's pretty standard fare. You got a drone shot, right? And you're like, well, I wonder which house it is. And look at this. Isn't that cool?
Yeah, that's awesome.
I highlighted it, and then the agent showed where it was in relationship to the Intel plant, because they're doing a $20 billion expansion out there.
Yep.
Going to bring in 3,000 people. So they're going,
yeah,
here's the house. Here's how close you are to work, right? So I thought that was well done. So kudos to the agent.
Yeah, that was awesome. That's going to bode well. That Intel plant's going to bode well for Casa Grande and all. even anything south in Chandler, Gilbert, and anything south, of, let's say, Ahwatukee, going toward the I-10.
Yeah, I think so. Grayman says a builder I went to had a waiting list, 84 people, and a person of interest list, 400 people. Do you know the difference? Well, I think the waiting list is people that have actually signed on and said, let me know, because if something comes up, I want to, get a contract right there.
Do you think they had to put a deposit down too, maybe?
Yeah. The person of interest is just keep me informed of what's going on. But it's indicative of what's going on out there. It's nuts. I'm not seeing. It was interesting last week. A few open houses. Traffic wasn't quite as brisk as I've been seeing. And there's hardly any open houses out there in the market. There's still bidding wars. We did get beat out last weekend on one. It's kind of frustrating. All weekend we were told we were in play. We were the best one. It was looking good. And Sunday night, gone. And so that's a tough one. What did rates do?
Rates have been, steady. I mean, they've bounced, they've come down a little bit, last month. They're at really the lowest, I wouldn't say the lowest point, but they've settled down now, where you've got basically you had purchase rates, 3.25, 3 3/8. Now they settled down to say 2.99, 3. The purchase and refi, it's settled down a little bit, maybe by an eighth. They've the last 2 weeks, 2.5 weeks, they've settled down, and they weren't, because back in end of February to March, it was just a staircase climb up every day for 30 to 40 days. Now the last 15 to 18, 19, 20 days, they've settled down because it's like when rates are moving up like that, I swear to God, I wake up in the morning and my heart, it's kind of like, okay, turn my computer on and see if I see red or green. If I see red, it's like, okay, how much? How much is it down now again? Yeah. And you're like, you got to be kidding me. And that's tough. That's why, when you're shopping, when people are out there shopping rates for refis, you have rates moving around. It's almost impossible to shop rates.
I had a lender make a comment on one of the live videos I did this week, and of course I made the comment, what's your rate, Pat? That it's so hard to shop rates, that there's more to it than just saying what's the rate. And he sent me a message. He goes, he posted on it. He goes, I'm so glad you said that.
Yeah.
So, what's your rate, Pat?
Yeah.
So, I want to touch on this, and this thing bugs me. The $25,000 grant that the Biden's talking about. A lot of things that you're hearing now, they're talking about it. They haven't implemented any of it. It's still got to get through Congress and got to get through the Senate. And I think a lot of it's just going to be dead on arrival. I like your idea, Pat, that says, why don't we just start offering some tax incentives to investors to help them sell their homes? In other words, give them some kind of a tax credit instead of hitting them with capital gains. Why don't you just say this year there will be no capital gains if you sell any of your investment properties? The inventory problem will go away, and we'll be able to get first-time home buyers in the house. But taking grant money and throwing it into an already frothy market that's frenzied, saying, here, now we'll make it even easier to get into a house, is not going to fix diddly or squat.
Yeah.
But that's not what bothers me about this bill. If I can't make any decisions in real estate to take into consideration race or gender
or age.
I'll lose my license.
Anything that has, discriminates. Bottom line.
So here's the language in this one. And you tell me, feel free to comment, folks, and tell me I'm all wet, but I don't like this. It says here, according to the proposed bill, socially disadvantaged individuals are defined by those who have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a member of a group, regard to their individual qualities. The summary says any individual identifying as Black, Hispanic, Asian American, Native American, or any combination thereof will meet this definition. Those are the only people that are eligible for this $25,000. That's it. Not me, not you. How do they get away with putting a program together that only goes to certain ethnic groups?
I don't know. From a lending standpoint, there's Native American loans too, but for the most part, I can't think of any other loan, group that's segmented, on the finance side. And, from my standpoint, I have never in 22 years, I've been doing it 22 years. I don't know about you, but I've never, ever come across a racial, discriminating type of situation. As long as you get I look at the paperwork, you got assets, credit. I don't care if you're purple, pink, it's just sad. And the government comes down on us when we discriminate, and that's what they're doing. I know what you're saying. I understand that these people, you need to give, maybe a certain, segment that has been shut out an opportunity, but they could probably go about it a different way.
I think they could. I think, and it's defined so loosely. It's not so much saying, here's what we're doing for you, but it's like, the minorities are not the only people that are having a hard time getting in a house right now.
Yeah.
And I think stop throwing money at it. There's nothing wrong with a tax credit that says, I won't charge you if you sell your investments this year. There'll be no capital gains because you're not going to get that money anyway, right? Because they weren't going to sell it.
Yeah.
And renters who are trying to find a home to buy will now have an opportunity, maybe even in the home that they're already in. If they would just look at it from the supply side instead of trying to throw more money at, because that's just going to make it so much worse. I didn't like the $15,000 grant, and I don't like the $25,000, but I don't see them go anywhere. I don't see it getting there. But anyway, that's enough of that.
And also the down payment assistance programs have been very tough to get. Sellers are not accepting. Sellers are not accepting loans with those DPAs, down payment assistance programs.
So we talked last week before the internet went boink about that collateral loan.
Yeah.
Can you explain that again?
Yeah, I mean, I'm going off of memory. I mean, I've been looking into it because we just signed up with the lender that allows it, but it's basically a bridge loan. It's going to allow somebody to buy a house and not have to sell their old house. If you got equity in your old house and you want to buy a new house, let's say, like I said, $150,000 you owe on your old house and it's worth, say, $500 or $450, let's say, and you want to buy a $550,000 house. They combine both values, the $550 and the $450, so it's $1 million. And so you add in the old loan amount, 150 plus the $550, so you got $600, say $700,000 worth of loans and $1 million worth of property. And then once you get into that, you buy that new property, you don't have a time frame that you have to sell the other house. So you can basically make a non-contingent offer on a house that allows you to say, hey, you have to qualify for both payments, but it has to be state Arizona. You can't be moving from Washington to Arizona. But the lender said that eventually they might open it up where you move it from Washington down to Arizona to collateralize your properties. It has to be single family residence. You can't be selling an investment property to buy a primary. It has to be like title, where it has a single primary residence to primary residence. But it just allows, and then once you sell the other house, like say in 3, 4, 5 months, you basically pay off. You recast the loan. They'll pay off, they'll pay down the new loan to a certain amount, and they recast it. So they'll resituate the numbers according to what, once you pay the loan down, what your payment is going to be, what your new principal and payment is going to be.
So it's a more flexible way. One of the biggest reasons why nobody's putting their house on the market is to say, well, I can't find anything. I'm going to be homeless. So this gives you some breathing room. The other thing you mentioned, is you said you won't have to write a contingent offer. Now, let me show you how big of a deal that is. So in the past 7 days, we've had 1,474 homes go under contract and 2,746 are pending. Only 68 of those are a contingency. So your odds of getting that that offer accepted are this big when you have a contingency in a market that's this aggressive. So if you can use something like that program, that'll help you a lot, because you turn in and I've been doing one, it's contingent, and they call me, love it, but gosh, I don't like that contingency.
Yeah. So basically, for Arizona, it fits for Arizona. Like if you're moving from, a city in Phoenix to, say Gilbert or Chandler, like you said, once again, it's not across state lines, but they hopefully will open up the program to state lines, the states that they do business in, like Washington, Oregon. The bank is Washington, just for transparency, it's Washington Federal. So WaFed. So, there's different programs like that. They're a reputable bank, obviously in the West here. So, it's a great program. So I want to touch upon real quick, boy, I tell you, I mean, it's a supply demand. It's a supply demand. I mean, I'm just sitting here shaking my head. You and I talk about this we talk about it every other day, and I'm trying to poke holes in this whole damn thing, and I can't. I just don't see this slowing down for the next couple of years. I mean, I was on that federal. This one lender had the Fannie Mae chief economist on. It was a webinar that I I think Tuesday, and he went over a lot of charts, supply demand. It was about a 45 minute to an hour. He went through PowerPoint, and he basically said it's supply demand. It's he was going through a lot of data. If anybody wants that webinar, they can somehow they can put their email.
Just send us an email and tell us you'd like to get that link. And so we've got our emails down below here.
Send me if anybody. That's right. Yeah, I see it. Hello. Send me an email if you want me to forward you that Fannie Mae. But he's a chief economist for Fannie Mae. So it was really it was nice to hear from a guy like that with that type of position, to hear he doesn't have all the inside scoop, but it was good. But once again, I've been trying to poke holes in this thing. It's just lack of supply. And what brings me into real quickly, I know there's a question there, but I'll just jump in this before I jump around. I think really people have to shift in. There is, once again, this FHA, the 203K loan, and the Fannie Mae home style renovation loan. If you find a house that maybe you have to really go outside the box to find a beaten up house that's got good bones but needs a lot of work, the Fannie Mae home style renovation loan, in a nutshell, they take the loan, they take the house, they appraise it at the current value. Let's say it's $200,000. But you're like, this house has got a lot of work. If we do this work, it's going to be worth $400,000. They'll appraise it in the beginning, but then they'll also say, okay, if you do this, what you say you're going to do in terms of work, the renovation, and you have to have a list. It's obviously, it's not an easy loan. There's a lot of moving parts. But in the end, they'll say, okay, based on this work that you said you're going to do, this house will be worth $400,000, and they will loan on $400,000. I think that is something that people got to start looking at, maybe.
Yeah, you got to have a little more tools in the tool shed. So have you heard of new VA? Heard of the new VA no limit loans?
Yeah, basically, there's no cap. I mean, no loan limit. It helps VA. I mean, we've seen higher VA loan amounts, no doubt, because they used to be capped by the county in certain areas.
Yeah, working on one right now, and it's it's pretty high loan, and it is nice. And I'm not seeing resistance to VA. There used to be a point people thought they were going to get hit with a lot of fees. They are a little skittish about the appraisers.
Yeah.
If you overdo it, but people are writing appraisal waivers and they have the cash to cover that. If you're putting a large enough down, you can get past that. But that's the only hard part. And then trying to close quickly. Some banks say that they can close quickly. Well, we're all hostage to the appraisers. We had an appraisal on Monday and we're waiting, and we're told that the due date is the 27th. So, everything's ready to go, and we're just waiting.
There's a shortage of appraisers out there, and appraisers are, I thought, people are backed up on the appraisal, because, what sucks is I have very limited control with the new government regulations that came out in 2010. I've got no control over the appraisal process because we have to go through an appraisal management company, AMC, and they've done this so that I don't have any influence on the value.
Yeah.
And the problem is I can't call an appraiser before the appraisal's done. If I do, it's grounds for dismissal, typically at any company, if you talk to an appraiser beforehand.
Yeah.
And so I'm usually the last one in the loop to know what's going on, which stinks. But the shortage.
Yeah, well, our only leverage is just to give them, if you have multiple offers, is to show them all the offers that you got. Say, look, I know this one's way above the asking price, but so was this one, and this one, and this one, and just leave that with the appraiser at the house. And you don't need to pull comps because they can pull comps just as easy. My brother's trying to refinance his house up in Washington State. It's a small town, and they sent an appraiser over. He is 79 years old, and he measured the house, and he's there 3 hours. It's a big house. They haven't heard from the guy. The mortgage company, lending company, nobody knows where he is. You can't get a hold of him. He's got a PO box. I don't know if he's dead. They can't. So now they got to get another appraiser, and they're having a hard time finding another appraiser to go to Port Angeles. And
well, that's the thing with
he's gone.
That's amazing. I mean, with appraisal, I mean that's the business. I mean, something always comes up in the business. I swear to God, it's just it's always something. But the problem is with appraisers, they're vetting to get into as an appraiser. They have to do like 3-4 years of an apprentice.
Yeah,
to take like 3,000 hours of classes and apprenticeship. It's not like they can just, when that's the problem. What people are, I mean, I don't think the average person understands. They just can't hire more appraisers because the apprenticeship to bring one on is so long. It's like you might as well get a law degree. I mean,
yeah.
I mean, it's 2, 3.
And then they're paying appraisers less and less every year.
Yeah.
And then there's the threat with the appraisers as far as a career choice that with the information all being out there, deposition may eventually go away because you can you can do it all anyway online. And so it's who wants to be an appraiser if you're going to go through this long 3-year apprenticeship?
And so if you're in a property that's out, a certain area, out of town, it's very difficult to find an appraiser. And like I said, sometimes these AMCs, they'll order appraisal, but you won't hear back on the order for a week or two, see what's going on. Like I said, they just can't hire these guys quickly to ramp up the demand, and they're backed up still.
Yeah, I wouldn't drive from here to Pine Top to do an appraisal for $350.
Yeah.
So
that's the biggest hurdle typically now is working with the appraisers, trying to get the order in on time, trying to find out what's going on. It's just that it's frustrating. And like you said, the government's taking the stick out of my hands in terms of control, because now everything's got to go through the AMC, a third party. And I just can't pick up the phone and call you if you're an appraiser.
Yeah.
So,
well, last Saturday we went up by 500 units on homes available, which is the first Saturday in I think the month since we've been looking at this where the number actually went up on Saturday. It usually goes up on Friday, but we went up by 500. And so when you're working with your agent out there, just be ready. I mean, I have a hot sheet. I'll show you this, and I've got several searches for clients that I have now. So I got Ahwatukee, Chandler, Gilbert, Sun City West, and Surprise. And so I just run just this general hot sheet when I get up in the morning, and it shows me everything that's out there. And Saturdays, jump on them, because most of them are making their decision Sunday night or Monday. But, this shows me I have no limit here. Here's a $55,000, modular home up in Sierra Vista. And then I get down here, there's a $1.7 million. So these are new listings that are coming on. So I like looking at these every morning, and I have my clients are already getting these updates. So if anybody wants to get, you'll get an email within 15 minutes as soon as these things hit the market. So if anybody wants to be added to that list, let me know. And then it also shows you that something went pending or new listing. So we have to be fast. So you got to be quick. But it's not like you got to be there by noon. But we looked at one today that went live today, and we're writing an offer today. I'll be sending it in right after this call, but still they're not going to review it until Monday night. So,
yeah.
But I don't trust that. I've been told that they're going to review it, and then another offer comes in and swoops you out, and I go, oh, heck, let's take this one, and it's gone. So I don't want to wait till Monday to send the offer in. So I got to send them in, strike all the chances there, right? Keep swinging that bat.
Exactly. And what I'm seeing on my end, I'm talking to some other agents too, besides yourself, and obviously, and they're like you said, there's investors still out there buying these stuff. And I just wish that these sellers and these listing agents would really take a look at the first time moment, because they do have control. Like just that one guy that I'm working with, this one buyer, a buddy of mine, his son, the listing agent said, And the seller said, we're going to sell to first-time home buyers, and that's it. Because there's 3 investors that were bidding the house up. She's like, I'm not taking your offer.
Yeah.
I give her I mean, that's what we got to see in this market. If people, I mean, we're seeing greed step in here.
Some sellers are getting nervous about cash too, Pat. So, because what happens is that, they'll put several cash offers out there, and then when they get the others accepted, they pull away from yours, or they give you a cash offer and haven't seen it, and then they go and look at it and go, and then they walk away. A lot of the cash offers aren't sticking.
Well, that's actually a good point. I mean, if you think about it, I mean, for somebody to get pre-qualified, you're serious. I never heard that, but that's a good point. I mean, a cash offer, like, yeah, I got $400,000 cash up. I'm putting the offer in. They can pull that out. When you go get a loan, you get, you're basically going to the proctologist with me. I mean, it's unfortunate, but once again, the lenders, people have said, oh, you're asking for this, asking for that, asking for this. I understand. I know it's not. I don't sit there behind a dark closet at midnight on a Saturday night trying to make this stuff up. These underwriters are coming up with this stuff, but it's what these underwriting. And I've said this once. I said 100 million times. The underwriting guidelines that they've come out with the last 10 years has made this a much more solid market. This market, I would not have the same confidence in this market if we had, we've got some kind of non-QM loans qualified, like bank statement loans and stuff like that. But still, even though those loans, even though they say they're easier, they still really underwrite those loans very stiffly also, very harshly. 12-month bank statements, they see if it's consistent. There's a lot of underwriting that goes in those files too. So but I have a lot more confidence in this market not being weak and being it's on a solid foundation versus 10 years ago. So
I sold and signed a lease for a year. I want to buy. I just don't want to deal with the bidding wars and required to play 20 to 60K over list. Hard times. That's the reality. I get it. But you got to look at list. I mean, sometimes people just list it low so they can create bidding wars. So the real price is the real, is what people are willing to offer. But it's the danger of the appraisal not catching up with the over asking price. Because, the asking price isn't always the appraised price.
No.
The appraised price could be something considerably higher than the asking price. So, right?
Yeah. And, even if it was that case, appraisers are going to stick pretty much with the contract price. They pretty much stick with the contract price because they're not, if something's 400, but they think it's worth 450, they're not going to, they're going to pretty much stay around that number. But,
yeah. So we got a question here. Andrew says, what's the average bids over asking price? Putting in an offer on Sunday. Tell you what, give me the zip code. Type in the zip code there, and I will tell you. So I've got this handy dandy.
I'm not quite understand that quite. What's the average bids for over? I mean, how much offer or how much over?
Yeah, what's the percentage? What are they doing? So in other words, in our market right now, we're averaging 56.6%, but you can drill down a little bit. Here's my price point. This is what's going on in the whole valley here. 300 to 400,000, 61% of those homes are going above their asking price. Well, by how much? 304,000, on average 15,000. But I have found that that's an average, but that's not to say somebody isn't going to come in and do 30. But those are your averages. So 1 million to 2 million to 2.5, there were 15 homes last month, and the average was 100,000 over list price.
I think people have to, I mean, this is just from my standpoint. You have to look at the opportunity, the time, opportunity cost of time, what your situation, you get, it's not easy right now. People have to sit down and they have to evaluate, how long have I been looking for a home? If you've been looking for a home for over a year, and you found the perfect house, what does that mean to you from an opportunity cost to find the house that you want? Is it worth 20, 30,000 that you don't have to be looking for another 5, 6, 7 months? You got to also look at it from an opportunity cost standpoint, I think. I mean, it's easier for me to say that because I'm already in a house, but you have to look at that and you look at, hey, if we are in this 3 to 4 or 5 year supply demand equation that's very strong. And if things do slow down, we're not going to see 15, 16% appreciation a given year. It'll probably be like 3 or 4%, be average. You're still gonna come out ahead in 2, 3, 4 years, or at least
yeah, and that's the thing. So then we're going up at 3.3% a month right now. So you have to ask yourself, am I overbidding or am I just
yeah.
I mean, I'm maybe I'm a month early. So here's the stats for this area. In the price range of 400 to 500,000, 82% of homes are going over list, and I experienced this firsthand. And they're going over by an average of 24,000. 5 to 600,000, they're going over an average of 25K. 6 to 7, an average of 20. So that zip code is pretty aggressive. It's saying that 60.5% of all the homes in that zip code are going above the asking price. Now, having shared that, that's not real simple math that just says, well, I got to go in, let's say you're between 400 and 500. I'm going to go in with 24,000. That may not even get you close to what's going on. So you have to take a pencil to it with your lender and say, what is my ceiling? What do I not want to go beyond on the payment? And if it doesn't appraise, how big is the possible gap? And you've got to work through all that with your lender and say, how do we close that gap? Because there are so many offers being written where they're waiving the appraisal that you can't hope to say, I'm going to bid 450 on this house. They're asking 400. And if it doesn't bid to 450, I'm going to renegotiate. They're not taking those offers right now. So you have to take that out of that, but you have to do the math on your own and go, okay, this is what I'm prepared to do. And go in hot, folks. Go in with your best offer. Nobody counters anymore on price.
No,
not right now. They look at the top 2 offers and that's it. And so if you're, 20,000 below what you really thought you could do, then you're never playing in the sandbox. So it's been putting in offers for about a month. We're just going to start throwing money at the house we love. It's too damn aggressive out there to not overbid. As long as you're comfortable with the payments and you're staying within your lane, then write the offer hot and try to ignore what they're asking for it. Try to visualize what you're willing to pay for it. Does that make sense?
Yeah. Yeah. Because, I mean, like you said, I mean, I think a lot of people are just, I think they're probably, I don't know, I'm just thinking this off the top of my head, that they're afraid that they're going to overpay and that we're going to be in a crash. They're fear of missing out, but they're going to, be buying at a $450,000 house at the peak, and a year later it's going to be worth $350,000.
Well, we have one now. I got a real time story for you, and hey, you're welcome, Andrew. We looked at the house and he put in a bid price that was above it. And I said, the way I'm looking at it now, I mean, I understand you're going to be nervous, and we've got a 45-day close, right? And by the time we hit that 45th day, we're going to hit his offer price, because it's going up at 3 to 3.5% a month. And you just do the simple math. By the time we close, his offer price is going to be spot on.
Yeah.
We're not even worried about the appraisal now, where at the time you're writing the order, the offer, it's like, okay, well, here's your risk. And so, I don't want to say that it's not nerve-wracking to see all this high bidding going on. It's just, it's just the market that we're in, is people are trying to establish the value of the home they want. And in some cases, they're probably paying too much, but that's, I'm not so worried about the price. I'm worried about the financial situation people are putting themselves in by waiving an appraisal and closing the gap with all your cash, or waiving the inspection. I'm more worried about that than I am prices.
Yeah. Yeah.
So your realtor needs to share the risk with you and explain it in detail, and then have a conversation with your lender and say, now, we're thinking about offering this. The house is worth this. We're thinking of going here. And we want to put in an appraisal waiver that says, if it doesn't appraise for what we ask, we offer you, I'll cover it. So you have to talk to the lender and say, can he cover it? What do you know?
Yeah. And that's why,
right.
That's like back. I mean, yeah, that's exactly it. I mean,
you don't want to jump in blind because you don't want to put that high offer in, have the appraisal come back, and then because people are making their earnest monies hard after the inspection period.
yeah.
Well, if the appraisal comes back and you don't like it and you got to come for another $30,000 at the table, you can't walk away. You can, you'll lose your earnest money. So you have to really be on top of the math in this market. So that isn't a bad thing.
No,
It's just, you got to be careful. So,
damn. Well, not trying to depress anybody.
well,
Just
like I say,
the low-hanging fruit's gone.
Yeah, it is. It is. But you know what? I've seen some surprises too.
Yeah, yeah.
I've seen some that, I mean, really the last two closings I had, Pat, were the offer price. They were in over 55 communities, but not to say that we're not getting outbid at some of the over 55s, but they're not beating us down like they are in, let's say, Chandler Gilbert. Yeah. And if I go up to Sun City West and that house is 365,000, I can reasonably write an offer for 365 and it'll be accepted.
Yep.
And I'm seeing that more and more, and there's some nice stuff. There's also some really nice, if you're a snowbird and you want to come out here and you want to get yourself a nice little park model in Phoenix so you can stay here in the wintertime. I've seen some nice stuff under $100,000. Now the lease fee is about $700 a month there, but you've got this community center, you've got a clubhouse, you've got golf. I mean, so there's some nice stuff out there if you just want to, play down there in that price point. So, and even out in Mesa, some of them out there, I saw one yesterday for $89,000. A pretty nice little place. So, and it had everything you wanted as far as entertainment. So it's a lifestyle. It's a lifestyle choice, that's for sure. So Pat, have a good weekend. I'm going to, before I go, I have to tell you this. I sold my car to Carvana yesterday. Those of you that don't know what Carvana is, they've got that big tower over by Tempe Town Lakes, and it's got all these cars in it. I call it the automobile Pez dispenser. So I had a car I wanted to sell, and I did my research and figured it was worth about $11,000. I thought I can get 11 for this. So I sent in a bid to have it, to get an offer price. They sent me an offer of 10.5. And I thought, this is fabulous. Well, I paid it off and I hadn't got the title back yet, Pat. So I couldn't accept the offer because I didn't have my title. So the title came in the mail. So they make you take a picture of the title and everything and send to them. And I put in all my information 2 weeks later. Now I'm getting $12,000. They offered me 10.5, then they came back with 12,000. I couldn't click that mouse fast enough. So I clicked it and they said, okay, you want to make a schedule pickup? And they give you all these choices. And I said, sure, 1:30 on, what was yesterday? I get my days screwed up, Thursday. No. And 1:30 on the button, up comes this guy, a little Carvana car, comes over with a little clipboard and a bunch of forms. I sign him. He hands me the check, cashier's check. Off he goes. Then they said, a tow truck's going to come by later and pick up your car. That's it. How easy is that?
That's amazing.
And evidently, when you buy from them, you get to drive the car for a week and decide whether or not you want to keep it.
I'll do that for a rental car. Come in for a rental.
Yeah. So
if people do want that, I'll just mention once again, if people want that webinar with the Fannie Mae chief economist, email me at pmcmasters@pricemortgage.com and I'll forward the email to you. It's pretty good information. I mean, it's nothing. I liked it. I enjoyed it. It shows you more in-depth charts and stuff like that.
Yeah, really. He really drilled down on what was going on with the economy. Yeah, and any pinch points that might mess us up. So it was a pretty good watch. You can sit back on your phone and just enjoy it. So.
Yep. All right,
have a super rest of the weekend.
Yep.
See you, everybody.
Bye-bye.